Liquidity sweeps are not random. They are the manipulation phase of a higher time frame AMD. Accumulation, manipulation, distribution. And once you learn how to spot these, you can stop getting trapped by liquidity sweeps, start using them in your favor to get into high probability trades like this 2.5R that played out perfectly on GBPUSD. So let me show you exactly what I'm looking at. So this is the 12-hour chart. This is a swing trading execution time frame. We are using the 12-hour chart in line with higher time frame candle behavior, the weekly, 2-weekly, the monthly. But price is fractal, so if you want to learn to use this on lower time frames, you absolutely can. But let me show you first and foremost how it works. So we don't want to just trade patterns on the 12-hour time frame. We want to understand what phase of price we are actually in. So the first thing I want to do is overlay my weekly time frame. And this gives me everything I need to actually start to read what price is actually doing in the market. So what we see here is that price swept a previous candle range. We had a bearish candle range, price ran into the low and then started to distribute higher. But at this candle here, we get the opposing behavior. This candle sweeps the previous weekly candle range. So what this is doing is saying that this is accumulation. We're now sweeping above. This is a raid of liquidity at the external range high. And the actual higher time frame target for price is in fact here. This is the low of the accumulation candle. Accumulation, manipulation, and then distribution to the low. But what ends up happening is we get another context. Price dumps towards the target, retraces into internal range liquidity, tries to go lower, but ultimately the weekly candle closes again as a sweep. We are sweeping the liquidity at the low of the previous candle range. So what that does is flip the target. The target for price then becomes this target here. And this is actually no longer the target for price. So we have a confirmed weekly liquidity sweep. And that's exactly what a liquidity sweep is. It's sweeping in to the external range liquidity at the high or low of a higher time frame candle. What price is doing is aggressively breaking below, so it's inducing more shorts at this point into the market, which then banks or institutions can then use as liquidity for their run higher. So as soon as this weekly candle closes, we have a higher time frame target exposed in the market. Now this is where it gets really, really crucial. We're not just looking at the weekly candle, we're looking at the 2-weekly candle and importantly the monthly candle. And this is showing us something very compelling. We have a previous bearish monthly candle range. Now price in this entire monthly range has broken below and is showing resistance by sweeping the previous monthly candle range. So actually, not only is this a liquidity sweep on the weekly time frame, this entire month price range is a liquidity sweep on the previous monthly candle range. And what is this? This is accumulation, manipulation, and where are we now going to distribute? Once this monthly candle closes, this is the target for price. And we can see, where does price target? This exact level. Accumulation, manipulation, distribution. Let's take away the monthly candle. What do we see on the weekly candle? Accumulation, manipulation, and distribution. This is a nested weekly liquidity sweep or AMD within a wider monthly liquidity sweep or AMD. So how do we trade this? Well, we're using the 12-hour time frame. Soon as this weekly candle closes, we can anticipate the monthly sweep. And now we're just looking for internal range liquidity. So price has a sell candle. We sell and then we buy, sell, buy. So we are exposing order blocks. This is exactly where institutions are placing their orders to essentially front run the market. So I can just mark that right here. So this is the last order block. So if I just add that, you see that price closes here. This is the weekly sweep, liquidity taken. We've now shifted. We have this target in the market. We have a sell to buy. So when this candle prints, what does the next candle do? It first comes in to the order block. more institutional buying happens, and that drives price aggressively up. So we want to be able to position ourselves at this exact moment to enter our position. We can either cover the order block or the previous order block as well. So we actually cover this entire zone. Now target 1 for price is right here. So 1.92 our trade. So we are trading after the liquidity sweep to the opposing end of the range, this target. But we know the monthly is likely on side. So if you want to hold beyond that in this first push, it makes sense to take at least a 2.5 R here. But where it gets really interesting is if you then take away the weekly candle and overlay the monthly, if you are able to hold this, this becomes an enormous 7+ R swing trade. That is how to trade liquidity sweeps. When you get these patterns forming, you know you have a high probability setup. Let me show you the same thing on another pair. So right here, I'm using the exact same time frame, 12-hour, CADCHF. This price action looks like a mess. But if I overlay now the 2 weekly candle, what can I actually see? So price in this 2 weekly candle range is manipulating below a previous 2-week candle range. So this candle is sweeping the previous candle. This is a liquidity sweep. As soon as we now get this bullish price action right here, we can be very confident we're in the second half of this candle that actually this candle is going to close inside the previous range. So where is the actual liquidity? Well, we have the last sell, which I'll mark as the order block, sell to buy. We also have a bullish fair value gap, an inefficiency in price between candle 1 right here and candle 3. So price has shifted bullish. It's now going to raid the internal range liquidity in this price leg. Where do we cover? Well, we can cover the liquidation of the previous candle because price has already done its job. Now where do we want to target? The opposing end of the range, which is the target here. This is the higher time frame target as soon as price closes. This is confirmed. We're front running this. This is an easy 2R trade. And that is how to swing trade using liquidity sweeps and understanding what phase of price we're in. Accumulation, manipulation, distribution. This works just as well on the lower time frames, but it's about connecting from a top-down perspective what phase of price are we on the higher time frames, then working down the time frames until you get to that perfect point where you can take a lower time frame entry. I'm going to have a lot more on this coming up soon on my YouTube channel.